Welcome back to Trader Sage. We're going to review price action on the MES MNQ. For the most part, you already know what we do. Essentially, we are ICT-style or ICT-based traders. You don't even have to say that. AKA, we are price action traders. Price action traders. Price action is king. I'd rather use indicators or not. Price action is still king, right? And you can still use divergences between like asset classes like ES, NQ, YM. Technically using those as indicators. Opposing asset classes like the dollar and the ES and NQ and the likes. So that's also like using that as a check in favor for your trade setup, for your ideal or for your strategy. But the point is to be consistent with whatever you do. Be consistent with whatever you do and be consistent with whoever you are. Anyway, this is the 4-hour chart. We treat the 4-hour chart as our higher time frame. We don't want to budge from this 4-hour chart until things are clear. And low key, if it's not clear, it has to be based on some type of contingency plan that you already accepted. Because if the 4 hour is not clear to me, then I'm okay going to the 1 hour, right? I'm okay if the 1 hour is not clear to me, then treating the 15-minute as a higher time frame chart. And those are the conditions, right? Clarity. And I would say that obviously a 15-minute trend or directional bias is not the same as in 4-hour directional bias necessarily. It may be, but you're not going to treat a 15-minute chart like a 4-hour chart. AKA you may exit trades sooner if you are utilizing the 15-minute chart as your higher time frame chart. Anyways, and that all depends, right? What's the next draw on liquidity, etc., etc. But anyway, that's the surface level content or context. All right, so if I highlighted this bearish fair value gap, it was bearish. Now it's potentially an inverted fair value gap. I divided that into quarters. It's kind of off though, right? Looks kind of off. Let me see. Let me see here. Or is off. Yo, Shen, stop playing, Shen. All right. You're low key. Let's just do this. Don't want to spend too much time doing that. We can do. All right. So looking good now, right? Looking good. This one here is better. It's okay. All right, so we have an inverted fair value gap. This is a bearish fair value gap. It's been violated here, and you can see price sweeping below, and essentially it's holding inside of this fair value gap. And we probably had news here. That was last week anyway. Let's see. Let us see. Anyway. No, that was today. Tweaking. All right, this is the one I was referring to. Wednesday, I'll be having these ugly, these stop runs. Right, take this off, look like a disease, right? But anyway, you kind of see what was going on here. catalyst for price doing what it's doing. And so that's combining fundamental analysis along with technical analysis. In the sense that ideally, if you have a news catalyst, like S&B Capital calls it a stock in play. Obviously, we trade in futures. So there's different things that move the market. And the argument could be like Linda Raschke kind of says that she doesn't really look at fundamental catalysts. Everything is in the charts. She's not the only one that moves like that. But you got to know what you're doing, right? Anyway, you got to be your biggest fan. There's no need to be humble. If you got a skill, you got a talent, then say that. You know what I mean? Hold that down. All right, so we got these 4-hour levels, and we just want to look at, and they say, okay, these are essentially sweeping below here. So it's important to kind of leave the high time frame chart up while you are looking for an execution on the lower time frame, because these levels, right? This looks totally different on a 15-minute or 5-minute. Right, like that's that. Like it's nice though. You can still use it to stop run. You have to stop run, and it's a lot. It's a lot to get you into a trade. I just like how these levels. So this is like the only confusing part here. Like, where is it going down here? But once the stop run happens, you can see price doing this thing, right? Price doing this thing. You can enter here. This could be your turtle soup. You can see price reclaim that level or this level here. You can see that's just been violated. This here has been violated, and then this candle open, pull back, stayed inside here above the midpoint of this, continue higher, holding above. You see, anyway, that's not the point. Don't want to get too heavy on that, but let's go back to the 4-hour, and then you can kind of see you still got imbalances here. You see, I think we spoke about this one already. Right, spoke about that one already because price used it as support here, stab through it. You can use this one as well. So it's still valid here. And you could think about, how do you see this? It all depends. You could also do, you don't like that, you can just do the wick, right? Just do this. That would be right. And you can see here, that's this wick. Pretty much held above 50%. So we leave that on there just to see. And then here you say, okay, there's no imbalances here. It's all balance. It's a balanced price range. Wicks, boom, boom, boom. Right? Got this inverted bearish fair value gap. You could use this instead of that. It's up to you, whatever. Inverted fair value gaps have more weight to me because they signify a change in the state of delivery. And obviously a bullish fair value gap should be just that. And you want to take, if it does retrace, you want to see if it's, you want to take trades that's below 50% of the range. In this case, below 50%, this low to this high, below 50%. And ideally, you want that entry to be an optimal trade entry. In this case, we got that. First profit would be here and here, previous week's high. Now we want to see what happens here, previous week's high. Oh, we didn't even drop down. But that's solid. That's one strategy. That's a 4-hour strategy, and that would be pretty much all day. This is 0200 hour candle. So that's the London session and until the New York PM session at the very least, or the New York AM session. The exit, depending on your target. But if you see this being violated here, boom, and it kind of traded back down. Even if it doesn't trade down with accuracy, you can still see there's a pullback into the upper portion of this 4-hour candle, and then it can proceeds higher, take out the previous week's high. What else we got here? You can also see that, like, how it plays out here as well. Like how this pullback here, you already have a run on stops. This is the significant swinging high for me. Is this right here, and I would say why this one versus this one. It's because of this gap here. And once this is broken, gives me some idea to say, okay, I'm gonna potentially anticipate price going higher. But obviously, so here, all right, so it's broken here, retrace down here, inverted bearish fair value gap here, sends price back into this inverted fair value gap. That's valid, and then drops back down. But you can see here, this was a shallow run below 50% of the range. It's all good. And now you get another run on stops, and you also have the 3 drives pattern here, 3 and then pattern, whatever you want to call it. 1, 2, 3 reversal pattern. And also, let's just get back into this. Orders. Turn back on, and let's just drag you. Let's just drag you a little. So same. And holding above the 25% of this. We treat wicks like gaps. So that's why you treat wicks like gaps. You can also just do. So what is this, right? This low here is technically the low that was the false breakout happened on. Boom, right? Technically, this is the retest of this break. Pull back again, and then pushes higher above this, and then pretty much just essentially retrace back to it. Didn't touch it, but you can count that as well. That's on you, whatever you want to be consistent with. And from here, I'm going to skip the 1 hour and just go straight to the 15-minute, because we are just looking for these. So this is this week here. And you can see this was a big, a relatively decent trend. And we have this decline and price holding below the midpoint of this 4-hour fair value gap. And then you can see consolidating. You have to think about time, right? So this is Monday's high, Monday's low, consolidation, trades below Monday's low. So we got some manipulation going on. And then you have distribution above Monday's high. And then you have here. So to me, it's like almost self-explanatory. It's almost like, why am I still talking? I'm not saying it like that, but like, stick to the plan, right? You can see it sweeping below the previous day's low. These blue lines for me, that's the Asian low, Asia high, or you can say this is the new week opening here. Apologies. So yeah, you see price essentially sweeping below. You could say it's holding the previous Asian range, kind of swept below the low. Just swept it here. Just continue to sweep it, or you can just use the previous day's low, sweeping. And this is the 15-minute chart. And 4 hour goes with the 15-minute. So you can enter, you can do what you do, whatever, based on your particular setup. What we got over here, again, price holding the quarter. Similar dynamics, right? So this reclaimed this bullish fair value gap here, boom, and then took off. Similar, sweeping the previous day's low. I'm talking mad like previous day's low. But anyway, it's one of those things for me. I have to remain like calm and calculated. I'm not with the, I am low-key, like, you know, just have to contain myself sometimes. So being calm is key. So similar situation, right? Boom, price swept previous day's low. So we got it. All right, so you use Friday's high. You don't worry about, if that's your style, I don't worry about Sunday's data for Monday. Actually, I heard that from ICT. You're going to put it back to Friday. So it's Friday's high. Friday's high, you see price holding above Friday's high. Sweeping this low and then targeting Monday's high. So we got to technically go, you can technically go inside day, outside day. It's not inside of anything but IO pattern. Inside day, outside day, because it ran the low, then ran the high. And this ran the low, then ran the high. So you got a inside day, outside day, outside day. So same similar dynamics here. So this Tuesday swept Monday's low, then took out Monday's high, and then bled out, found support here in the 4 hour level, and then swept Tuesday's low. And then you have some aggressive down, aggressive back up, reclaiming these lows, reclaiming these previous day's lows, and then reclaiming this fair value gap, and then targeting the previous day's low and previous day's high, apologies, and ultimately the previous week's high. And now you can see that we are like doing some things at the previous week's high. So let's see what we see. All right, so these little gray lines are delineating the 4 hour candles. 4 hour candles. So you can trade those like the power of 3. You can trade that like right here. Because you can, same concept, right? This is the previous candle's high. This ran the previous candle's high. Retrace back into the previous candle's, essentially previous candle's high, or the upper quadrant of that previous candle's range into this 4 hour imbalance. And that's testing it. So you tested that. That's one. It's your breaking structure, your retracement, and whatever PD array you want to see. But low key, you don't need one necessarily here. You can say, hey, price is actually holding above this key level, this consolidation range. Or you can say it's holding above the midpoint of this inverted fair value gap. And you can see here that price is like, nah, we ain't going back down, because it should have held below here, but kept pushing higher. Ultimately, coming here. Anyway, let's turn that off. This is what it is. Highlight last bar of, that's what that is. And just set it to 4 hours. You can set it to 1 hour if you want, or whatever time frame you want. I'm gonna turn that off. But that's like it's useful for identifying the power of 3 in relationship to the previous candle's high and low, or range in general. All right, so you can easily do that with the London session, New York session. So consolidating before. So we got 9:30. We have manipulation, which 9:30 is known for manipulation. So yeah, I don't even know. So it already ran out sell side. So what's the next target? Buy side. And this is where you can get that from. For me, it's a 4-hour chart. And this is why I use the 4-hour chart. But you can use you can use the 1 hour too. So this is like the story. You can say this, it depends how you read it, right? You can say, okay, price took out external range liquidity here. But low-key, it did it here, external range. Then here, it rebalanced this price range. They have internal range liquidity. Back to external range liquidity, taking out this low. Back to internal range liquidity, but all right, it's a lot of force anyway. But these relative equal highs, these was a target from way back, right? The target, it's a sheer fact that it exists. It makes it a target. And we also have divergences here as well. Seen that yesterday. So I have this divergence here between the ES and the YM, ES and the NQ. September 30th at the 1400-hour candle. We have the ES making a higher high and the NQ refusing to do so. So this was your reason for the pullback into a key level. And because the NQ now is the leader, right? NQ now is the leader, it's gonna pull everybody up with it until take this high out, take this high. Low key, take this high out. But this high right here is that high. So you know what I mean? But yeah, you usually say that, hey, it depends how you see it. Like you have to be consistent with what you need to see. So you can say internal range, because this is return back to internal range liquidity. Not see it as like, that would be this low to this high perhaps, or this low to this high, whatever. So, so internal range, what's the next target? If you go internal range, external range, right? Right. So same thing applies here. There's a tiny fair value gap here, or this inverted bearish fair value gap here. So market engineers liquidity. So you say what? Internal range, and this engineering liquidity holding takes out this high, external range, back down to internal range, then targeting that high, then this high, or this high, whatever. You want to do swing highs, and you go here and here. So that looks like the more logical explanation. But you also have to you don't need to know all of the PD arrays. You don't need to know all of them. You can just use fair value gaps, which I'm trying to emphasize here. And ironically, fair value gaps and wicks, treat gaps like wicks. So treat wicks like gaps. Oof, I gotta get some sleep. Anyway, I don't edit nothing, so whatever. Yeah, low key, you can do a lot of things. A lot to do in this, but ideally, you don't want to. For me, you don't want to move off of a particular time frame until you see what you need to see. And I think if we did this before, I hate that. All right, so boom, right? We're just going to look for places that price essentially held levels. Like what you're looking at. So I see 1 resistance, 2, 3, broke through 4. Low key, let's pull that down a little. 5, 6, 7, have multiple touches, almost 8, right? You can pull that down, fine tune it a little if you want. And likewise 1, you see the candles closes here. 2, 3, 4, 5. 6 because it's the candles close, candles open, candles low, right? Multiple touches here. Let's see here. 1, 2, 3 resistance, broke through, false breakout, way back in, found support at the previous key level, broke through again, found support, essentially the body, so we can adjust that a little. And the reason why, adjust that a little, right? Obviously that's for this type of price action here. You won't know to adjust that level if price is like right here, right? But you still see the key level. And support and resistance is not just like a key, like one level, is more like a zone. It's more like a zone. I told some of my trading buddies, I know nothing about supply and demand. I don't know the terminology, rather. I know what liquidity is. I know what support and resistance is. And essentially, by default, I would know what supply and demand is, right? Because that's what kind of drives the market, right? All right, so same situation. False breakout here, breakout with strength here, found support here, resistance here, traded almost back down here. And you still, let's just ignore the gaps for now. So yeah, these are key levels. Let's see what we find in terms of trading opportunities. There's plenty. There are plenty. Right? But low key, that's a 4 hour. If you wanted to like be like thorough, you can also put 1 hour levels here. Just kind of change the color. Same principle here, but and that way it'll prevent like this, like, oh, how come it didn't go all the way down? As you'll find like a key level back here, right? 1, 2, 3 typed in, 4, 5, right? So that's a key level is around here somewhere. And you can see it here, right? But anyway, it's just, that's an opportunity. Okay. Right? So Monday comes, 9:30. It's kind of like here. False breakout, right? So you can see, all right, price was like, it broke above it, tried to hold, retest, broke below it. Try to break above it again, drop, put some displacement, some degree of force. Boom. So you get the retest of that level, optimal trade entry short. Right, retest, just consolidating this, banging its head against the ceiling. And boom. Breaks below this previous level. Boom, boom, right? Support here. Consider going long. As you found support. Target previous highs. Or just target this, this support and resistance level. Boom, knocking, can't get through. Drops again. Targets that previous low. Knocking, sweep. Just consolidated inside these two levels. Sweeping below. In this sense, you want to still look for, I'm trying not to like see what I see, like in terms of fair value gaps. But yeah, so you can still see like price is trading in the range. So if price gets to the near the top of the range, get out. Gets to the low of the range, get out. And you just keep going up and down here if that's your thing, right? Yeah, I have no way but to like look at fair value gaps. Like that's just what I do, right? Time and price as well. So, but yeah, broke above here, you continue higher, right? Because you get, based on time and price, you can just do what you need to do here. Anyway, I'm just freestyling. I just know I had to do something on the charts here. I expect to be here for 30 minutes, but it's beneficial to me. Hopefully it was beneficial to you. Please like, comment, or subscribe. And, peace out.